Hi, in today's video we're going to cover candlesticks and how to read them. Candlestick charts originated in Japan over 100 years before the West developed the bar and point and figure charts. In the 1700s, a Japanese man named Homer discovered that while there was a link between the price and the supply and demand of rice, the markets were strongly influenced by the emotions of traders. Candlesticks show that emotion by visually representing the price moves with different colors. They also provide the quickest visual grasp of price action and the market sentiment behind it. Traders use candlesticks to make trading decisions based on regularly occurring patterns that help forecast the short-term direction of the price. To read a book, you have to understand the letters to form meaningful words. Similarly, to read charts, you have to be able to read the candlesticks to form meaningful patterns. Candles usually have a body and a wick, also called a shadow, at both ends. The body represents the range between the open and closing price for a given period. The wicks, or the shadows, show the upper and lower price ranges. Any of these individual parts may be missing from a given candle. Each candle displays all price information, the high of that period, the low of that period, and the open and closing prices for a given period, depending on the chart's time frame. The period covered by each candle depends on the time frame of the chart that you are viewing. Each candle on a 1-minute candlestick chart covers the opening, closing, and high and low prices for 1 minute. And similarly, each candle on a daily candlestick chart shows this price information for an entire day. Body color tells us the price direction for a given period. The most common color coding is green bodies for higher closes and red for lower ones. In this video, we'll continue to use green for higher closes and red for lower ones. What is the relationship between the body and the wick? The length of the bodies and the wicks in absolute terms and relative to each other can tell us a great deal about market sentiment over the duration of any given candle on a candlestick chart. For example, let's take a doji candle. As you can see, the doji has a very small candle body, meaning that the opening and closing prices are almost the same. This indicates indecision about the price. The longer the wicks are relative to the body, the greater the indecision and the greater the back and forth struggle between buyers and sellers. The market simply couldn't make up its mind about the direction of the candle. The market bounced around, and so the closing and the opening prices were quite similar. When a doji occurs at the top of a strong move of, say, 5 to 10 green candles, this could signal a change in direction of the trend. Dojis that occur during a period of sideways consolidation, however, are less significant because sideways price action already reflects indecision. Another candlestick shape that is important to understand are long body candles. A long body candle is one which opens and surges up or down without ever changing direction. As traders, it is ideal to have an open position, in the right direction of course, at the start of these candles, but we seldom want open positions once these candles have been formed. Overall, candlestick forex analysis can be a very powerful tool if used correctly. In the next video, we'll take a deeper dive into various candlestick shapes and what trading signals they provide. Thanks for watching. If you have any trading related questions, please send them through to us at www.fxscout.com.